Last month, I walked into my bank and asked a simple question: how much money have I paid you in fees over the last 5 years? The manager looked uncomfortable, pulled up my account, and the number on the screen made my stomach drop: $2,740. Just in fees. For the privilege of them holding my money while paying me 0.01% interest. You've ever been hit with a $35 overdraft fee when you were just $5 short, or noticed your savings barely growing despite years of deposits? You're not alone. Today, I'm breaking down exactly how the banking system is designed to extract wealth from average Americans and the simple moves that can put thousands back in your pocket. Have you ever wondered why banks can afford those massive downtown buildings while paying you pennies on your savings? Let's follow the money trail, because once you see how this system actually works, you'll never look at your bank statement the same way again. Banks operate on a brilliantly simple business model that most people never question. They take your hard-earned money, pay you almost nothing for the privilege of holding it, and then turn around and lend that same money out at 10 to 20 times the rate they're paying you. It's probably the most profitable arbitrage opportunity in the history of finance, and it's happening with your money right now. The average savings account in America pays a pitiful 0.41% interest. Meanwhile, inflation is running at 2.7%. You don't need to be a math wizard to see the problem here. Your money is literally losing purchasing power every single day it sits in your account. It's like having a bucket with a hole in it that gets bigger every year. But that's just the beginning of how banks extract your wealth. Let's talk about those minimum balance requirements. Banks love to advertise free checking, but then bury the details in the fine print. Most traditional banks require you to maintain a minimum balance of $1,500 or even $2,500 to avoid fees. Who gets hit hardest by this? Lower-income customers who might need that $2,500 for, actual life expenses, and if you fall below that minimum balance, that's when the monthly maintenance fee kicks in. Banks charge up to $25 per month just to keep your money in their vault. That's $300 a year you're paying for the privilege of letting them use your money to make themselves richer. The absurdity of this arrangement would be funny if it wasn't costing Americans billions annually. Let me show you how this plays out with real numbers. If you deposit $10,000 in a traditional bank paying that average 0.41% interest, after 10 years your balance would grow to a whopping $10,410. That's your reward for a decade of letting the bank use your money. During that same period, the bank has lent your deposit out as mortgages at 5%, auto loans at 7%, or credit cards at 24% APR, making thousands in profit from your money. The wealth extraction doesn't stop there. Overdraft fees are another ingenious trap built into the system. When you make multiple purchases in a day and your account goes negative, banks don't process those transactions in chronological order. No, they process the largest transactions first, specifically to drain your account faster and trigger multiple overdraft charges. Let's say you have $100 in your account. You buy coffee for $5, lunch for $15, and then an unexpected bill hits for $110. Instead of charging you one overdraft fee for the bill, the only transaction that actually exceeded your balance, many banks will process the $110 first, making your account negative, and then hit you with separate overdraft fees for the coffee and lunch too. At $35 per overdraft, that's $105 in fees for a single day. The banking industry collected $11.8 billion in overdraft fees in 2019 alone. Here's the part that should make you question everything. While they're paying you 0.41% on your savings, banks are turning around and earning 15 to 24% on credit cards, 6 to 12% on personal loans, and 4 to 7% on mortgages. The gap between what they pay you versus what they earn using your money is staggering. But there's good news. You don't have to participate in this system. If you moved your $10,000 from that traditional bank paying 0.41% to a high-yield account paying 5%, which many online banks offer today, you'd have $16,288 instead of $10,410 after 10 years. That's nearly $6,000 more in your pocket just by changing where you park your money. This isn't some complex investment strategy. It's literally just putting your savings in a different type of account. You're being smart with your savings account, but there's a financial drain that's even harder to escape. While you can choose to move your money to a high-yield account, there's another fee you're paying whether you want to or not. Behind every swipe of your credit card lurks a hidden system that's skimming money from virtually every purchase you make. Remember, those Visa and MasterCard logos you see everywhere? They're not just convenient payment options, they're the gatekeepers of a massive financial empire. These two companies have created what amounts to a private tax system on commerce itself. Every time you tap, swipe, or insert your card, merchants are paying between 2% to 4% of your purchase to process that transaction. This might not sound like much, but these swipe fees added up to a staggering $126 billion in 2022 alone. And here's the kicker: those costs don't just disappear into thin air. They get baked into the prices of everything you buy. That coffee, that costs $5? About 15 to 20 cents of that price exists solely to cover credit card processing fees. The same goes for your groceries, your restaurant bill, and yes, even your rent if you pay by card. Small businesses get hit the hardest by this system. For many local shops and restaurants operating on thin margins, these processing fees can eat away up to 30% of their profits. Think about that. Nearly a third of what could be going toward better wages, improved products, or lower prices is instead flowing to credit card companies. And unlike big box stores, small businesses don't have the negotiating power to demand better rates. The situation has gotten so bad that in September 2024, the Department of Justice filed a lawsuit against Visa, accusing the company of maintaining an illegal monopoly over the debit card market. According to the DOJ, Visa has been systematically eliminating competition by partnering with emerging players before they become disruptors, basically buying out or partnering with any company that might threaten their dominance. But it gets worse. The lawsuit alleges that Visa has been violating the Durbin Amendment, a law designed to increase competition in payment processing by implementing what's called cliff pricing. This tactic essentially punishes merchants who try to route transactions through non-Visa networks by imposing significant fee increases. It's like saying, sure, you have a choice, but if you choose anyone but us, we'll make you pay dearly for it. The banking industry and credit card companies want you to believe these fees are justified because they fund your rewards programs. You know those points and miles you earn for spending. But here's what they don't tell you: these rewards primarily benefit higher-income cardholders, while the increased prices caused by swipe fees affect everyone, including people who pay with cash, debit cards, or food stamps. When all is said and done, the average American family unwittingly spends about $1,000 every year on these hidden swipe fees. That's money quietly leaving your pocket without you even realizing it. $1,000 that could be going toward your savings or investments. There is some potential relief on the horizon. The Credit Card Competition Act, introduced in 2023, aims to break the Visa-MasterCard duopoly by requiring banks to offer at least two networks for processing credit card transactions. Predictably, the card companies claim this would destroy rewards programs, but studies suggest the impact on rewards would be minimal, less than 0.1%. So what can you actually do about this right now? While you can't single-handedly dismantle the credit card processing empire, you can make choices that minimize its impact. Consider using credit unions and online banks that typically offer better terms than major banks that profit from the current system. When shopping at small local businesses, ask if they offer a cash discount. Many do, passing some savings back to you. And for larger purchases, sometimes simply asking, "Do you have a cash price?" can save you significant money. So there it is. The banking game isn't rigged against you. It's just that nobody explained the rules. Now you've got the playbook. The next step is taking action this week. Add up what you're paying in banking fees annually, hunt for those high-yield savings accounts, and seriously consider making the switch to a credit union. Credit unions are financial game changers because they operate as not-for-profit organizations, which means they can offer significantly better rates and much lower fees than traditional banks. As certified financial planner Doree Freeman points out, while interest rates have started coming down, and we expect that to continue, you can still benefit from high-yield savings accounts now, especially with savings accounts that offer well above the average interest rate. Every smart move you make with your banking sets up a compounding effect that works in your favor rather than the bank's. Your money should be building your future, not funding another bank's downtown skyscraper. You've got the knowledge, now it's time to use it.